Today, we're looking for opportunities inside the stock market and the crypto market, as well as commodities and Forex. As expected, what we talked about yesterday played out. All sectors were up 1.33% in the main markets. The energy sector was a little bit weaker. Tesla suffered a 4.53% loss. The rest of the market did quite well. One thing to bear in mind, most of the earnings season is over, and we're getting quite a lot of companies reporting. When we get into the following weeks, November the 6th, November the 13th, the 20th and the 27th, the major earnings have passed. If you're liking the content so far, please smash that like button, and just be aware, scammers impersonate everybody on YouTube and social media. The only things I'm involved with are down here on the About page of the YouTube channel. If anybody wants to manage your money on your behalf, they're going to get your money, so be really careful. I'm talking, of course, about people who reach out, scammers. Yesterday's video predicted a bounce because of the CTKS structure on the Tier 1 charts, especially the S&P 500. Understanding CTKS structure is an absolute game changer. There were some great comments in yesterday's video, just much gratitude and appreciation. As a professional tip, keep your eye on the CTKS structure of the Tier 1 charts, cross-reference them to the Tier 2 and Tier 3, and you'll have a picture of the markets that rivals the big banks. You'll literally be able to trade and invest like an institution. Tesla's been hit pretty hard, so we'll look at that CTKS structure in a moment. When we look through the main markets, we see the fear gauge of the markets is coming down. That's because we came into very solid CTKS structure on the S&P 500. I pointed that out yesterday. We can also see that high-yield corporate junk bonds are staging a recovery. This is really good. We've got a crossover and a series of higher lows. That's fantastic for the market. That supports a thesis of a bounce. We'll have to keep our eye on the structural levels to see how far that bounce goes. We've already seen a bounce come through on the Nasdaq. Oil has been a little bit weak, and we've seen the bond yields and bond prices just reverting at the moment after this capitulation late in October. For a variety of structural reasons, gold will struggle around this 2000 mark. We'll have a look at gold's chart as well. And it's very good news for the crypto market, for the stock market, for just about everything, and the Forex pairs, when you can see that the DXY came down. The DXY is incredibly powerful. CTKS structure is unlike anything that you will see anywhere else. It marks up all of price history. In this case, on the S&P 500, this area of structural support between 40.88 and 41.09 has been marked up according to more than 55,800 days worth of data. We've seen very strong market action. We literally gapped up into that 41.61 to 41.92 area. This area is a really important area to overcome. If we get on the other side of this 41.92 mark, the markets have a very good chance of a continued and sustained rally. The thing to bear in mind, price is always moving in a wave. This is where we are currently. And if we continue to make our way through this structural resistance, that's utterly fantastic. But don't forget, the sellers are here and they're trying everything they can to push price down. So long as we continue to make a low and a higher low and a higher low, everything looks really good inside the main markets. This, of course, will translate across all of the markets. This is why, in spotting opportunities, you can't just spot an opportunity, you need to know how the markets are actually moving. Thank you so much for watching. I really appreciate you being here. And if you're liking the content so far, please smash that like button and subscribe. We'd love to have you as a part of our global family. You'll find we have the most incredible people here. We've seen broad-based dollar weakness, and this is a very good thing to see, especially for the stock market. When the dollar gets weak, the dollar pairs such as the fiber, the Aussie, the Kiwi, the cable, they all party. When you understand CTKS structure, it's an absolute and utter game changer. When we look at US oil, which has been marked up with the CTKS method for about 60,000 days, let's just pop on the indicator. What we saw in yesterday's session, oil was coming up to this very solid structural resistance level around that 85.90 mark. It rejected it. It was getting weaker. If it can't move up, it's going to the lower levels. And we've seen the energy sector selling down. You can see how price supports is supported by these structural support areas when prices above, and I'm just assuming we're not looking to the right, we're looking back to the left. Just to make that a little bit easier to understand, when prices around here, this particular line is a structural support line. There's another one there. The fact that we can't get above, we can't come back up and seek to challenge this structural level means that the market is weak. It lost its structural support here and it's going to stronger structural levels downstairs. The thing to understand with structure, you use the same method to understand where structure is on every single chart. We've come into a very solid area. Remember what the S&P 500 just did, the SPX. It came down to very solid structural support. Now we're seeing that inside oil at 82.03. It's absolutely no wonder that we've bounced from here. We're starting to get a crossover. We would expect some positive momentum inside oil that could throw a little bit of negativity into the market. That's the concept of price moving in a wave. The one thing to always bear in mind, these structural resistances and structural supports act as ceilings and act as safety nets. When you get more and more and more of them, the sellers can gain control for a certain amount of time, but these are also inverse buy levels. So we need to be really understanding of what support and resistance means from a structural perspective. And US oil has been trading since 1861. For example, when we look at gold, gold had this incredible upsurge on geopolitical tension. What actually occurs inside price structure? It is literally all about structure, total market structure, which is very different from market structure. Market structure in the conventional mannerism is very short term. It's used primarily to determine trends. Total market structure is completely different. It is CTKS structure. That means it marks up all of price history. We can see that gold has been experiencing a very big up push and then has decayed down. Let's pop on the indicator from the monthly service and see what is occurring here. There was a very strong structural resistance level when price was below at around that $2001 mark. There was resistance up slightly higher. What typically happens when you feel this potential fresh air gap like this, and there was layered resistance, but it was fairly light. The concept is you are churning through all of those sellers, but the sellers will regain control. And if it pushes it down below key levels, the bias is towards the downside. Just think about what's happening with oil at the current time. We're seeing the exact inverse playing out here on gold. That will give you opportunities that you can trade and invest in. When you're looking just at price, and let's have a look at NVIDIA, which has been trading for over 9,000 days. We saw a lot of weakness inside NVIDIA's price momentum. Now what are we seeing here? This is a low, but this low is higher than that low. This is a higher low than that higher low. So we've got the formation of an uptrend. Let's look at the structural support and resistance levels. These are critical to understand. If you don't know where the structure is, you're just guessing. What happens with structure when it hits, and we're talking about over 9,000 days, this CTKS structural line is very strong. It managed to rebound price, but then we had weakness and it came down to the next structural level at that 402.11 mark. I'm almost saying FOMO. The concept is that if we actually start to break this structural resistance level around this 412 mark, 414 mark, This is really positive for Nvidia. If we get a bounce in the S&P 500, we've got to keep our eye on oil. That could be viewed as an inflationary sign, but it's looking pretty good. Generally, you get follow through for the next week when things get as oversold as they are. We wouldn't be at all surprised if Nvidia recaptures this 414 mark and makes its way higher, short term at least to the 435. We understand the price is always moving in a wave, and these structural levels are critical to keep your eye on. How you interpret CTKS structure on one chart is how you interpret it on every chart. It's really cool and very straightforward. Bitcoin and crypto are very good to look at because Bitcoin, like junk bonds, is a really phenomenal indicator of risk-on or risk-off sentiment. What we can see right now, Bitcoin is really strong. What we also know, Bitcoin's gravitational movements, that is, how it moves up and down, are reflected across the entire crypto market. If Bitcoin moves up, we expect the alts to move up. If it moves down, we expect the alts to move down. What we always see, and this is really neat to understand, there are some divergences, especially when the markets are starting to turn around. In the past, we've seen ADA and XRP lead the markets higher. When Bitcoin is starting to bubble up, starting to get ready for its run, we see ADA and XRP front running. We've also seen quite a lot of very powerful movements in Solana, and I mentioned Solana in yesterday's video. It's a great opportunity. Of course, if you saw Solana in yesterday's video, you would have participated in a really good rally. And to those people who did and have reached out, congratulations, my friends. These cryptos tend to move around. Keep your eye on how different projects move in response to the market. Doge used to come up and front run Bitcoin, and then that lead got taken over by ADA and XRP. I think ADA and XRP's lead will get taken over by Solana. I wouldn't be at all surprised if Tron drops out of the top 8 as things get hotter and hotter. One thing to keep in mind, when we look at Bitcoin, we've got a lot of structural resistance from that 35,180 mark upwards. That means the price has got quite a few barriers to get through. That's why Bitcoin has been flatlining since it came up and tried to get through it but was unsuccessful. It tried again, unsuccessful again. This is the power of structural levels. When you understand where they exist inside market structure, and we're talking about levels that have been drawn up with the CTKS method, which is the world's most powerful smart money buy and sell level detection system for 5,100 days plus on Bitcoin. This is a significant level. This is not a retail level. Retail levels are just drawn from recent price. People would say, oh, this is a resistance level. When we get above that, we're going to party. Actually, it's not resistance because Bitcoin has not been trading for just a couple of days. One way to look at it is this is 5 days worth of price data. If somebody says this is the most important resistance line in Bitcoin's history, that's clearly not the case. If you look at statistically significant resistance levels and support levels are drawn out from a lot of price data, not just a little bit. This is like literally 0.1% of price action inside Bitcoin. And what does that mean? It's statistically insignificant. When we look at this particular level, this level from 35,183 up to $36,025, that is a statistically significant structural resistance level. The way to detect those is through the CTKS method. Long-time viewers understand that Bitcoin controls the fate of the alts. So therefore, where are the structural resistance and support lines on Bitcoin? We can see a structural resistance line, 34,434. This one is important. We've seen it action time and time again. Where is the next one up? That's a 34,712. If we just get above this 34,400 level, we're moving next to the 34,700 level. To get above that would open up all of that resistance. If we don't get above, we're going below For example, that's a very easy rule to understand how price moves. If it's not going above, it's going below. And if it doesn't go to the next one, and where is the next one? That's the key. It's around that 33,800 mark. If we don't hold on to 34,430, we're going down to that 33,800 mark. But if we get above that, we're first challenging this 34,700 mark, and then we can start to go up into that structural resistance. Always keep your mind on where price can go according to structure. But the key is, this structure is playing out on all of the alts as well. To identify opportunities inside the crypto market, you must understand the structure of Bitcoin. Solana did really well in yesterday's price action. It got above a level of smart money structural resistance and then started to party. But as Bitcoin's gravity impacted Solana, Solana couldn't escape that. This is why it's vital, even if there's not a structural resistance level, you've got chart and cross interdependencies at play. We can see for Solana, we broke through this 33.02 structural resistance level when price was below it. We managed to get through the 33.25 mark and also this 33.75. Because Solana is controlled by Bitcoin's gravity, we need to be aware of how Bitcoin is moving. If Bitcoin comes down, we would expect Solana will get pulled down to this 33.76 mark. If Bitcoin starts to rally up, the next structural resistance on Solana is 37.03. And congratulations to everybody who did well on Solana yesterday. XRP is also a community favorite. Let's have a look at where the structural levels are through the CTKS method. And what we're seeing, these levels are drawn out from over 3,700 days worth of data crunching. So that's important to understand. As we got over this particular level at 56.79, XRP started to rally up. That was whilst Bitcoin was rallying up as well. We had two structural levels, but they were fairly light at 57.68 and just a little bit higher. Those structural levels contained XRP's upward momentum, but as we saw Bitcoin start to falter, that throws directional correlation onto XRP. But we can see XRP increasing in its strength. This is a very good sign for XRP holders. If we find that Bitcoin starts to come down, we would expect XRP to test this 57.72 mark or potentially the 56.79 mark. But if it goes up, where could we anticipate? Oh, there's a really nice fresh air gap up here. Structural resistance is up around the 6.003 mark, around the 6 cents mark. And that is a really good fresh air gap. You can see fresh air gaps are starting to emerge on Solana and XRP. What does this actually mean? When you have a positive fresh air gap, that means you are expecting a bullish price momentum. A positive fresh air gap means that there's literally no resistance to push price down. The sellers just aren't there. And if the sellers aren't there, just minor buying can push price up because the sellers have their levels higher. The new sentiment was incredibly negative over the past week. Everybody was talking about market crashes. What you will learn is that financial markets are subjected to rules and they move within structure. If you know the CTKS structure, you understand where things are going. We can see Solana doing very, very well because there's very little structural resistance to hold it back. XRP is getting into the same position. I've shown you those two opportunities. And why these big opportunities why are they so big? Because literally you can turn over small percentages with a lot of money and do incredibly well. Much better than you can do if you are off chasing the 1,000-to-1 token that may actually end up going to zero. You can also do incredibly well in these big tokens with a smaller amount of money. The key is always synchronization. One thing that can typically mystify people when they first start in financial markets, even if they've been inside financial markets for a long time, the lack of structural overhead resistance, CTKS structural overhead resistance, means that these percentages can come up far, far greater than other percentages. You might notice sometimes that particular projects will just jump up, and there's no new news on it or anything like that. It's to do with structure. The greatest gainers past 24 hours, some things to keep your eye on, some opportunities that might be emerging. We're seeing Rune, Arweave, Atom, BitTorrent, Solana, Pepe, Algo, XRP, and Monero. Just bear in mind that every single crypto moves in alignment with Bitcoin's gravitational pull, either overextending it to the upside like we're seeing with Rune, or overextending it to the downside like we're seeing with Gala, Render, Aave, DYDX, Sand, Flow, Ape, Fractshare, and Mana. You'll also notice that certain groups tend to come up together. Mana, Ape, Sand. These are really interesting groups to follow. And of course, Gala, right up the top. What's hot yesterday may not be hot tomorrow, so just you must understand where the structure is, especially the structure inside Bitcoin. And you can cross-reference that to the Tier 1, Tier 2, Tier 3 charts to gain an overall picture to get you synchronized. Turning to 24-hour liquidations, we've seen about 51 million out of a little over 92 million in total liquidations being long. So the price has come down a little, but there's always short and long liquidations occurring. When you see these red areas, they're short liquidations. Those short liquidations push price up. Over the 24-hour period, you can see there's a number of those. Solana was getting hit with short liquidations. They change around as price is always moving in a wave. What we're seeing now are a lot of short liquidations and a few long liquidations come in on Solana. Price is always moving in a wave. People like to take profit and they like to buy value. If you would like to reach out to me at any time, just go to the YouTube home channel, go to About, and you can directly message me on Twitter. And please be aware that there are so many scammers out there. They promise all sorts of things, guaranteed returns, to manage your money on their behalf, which means they'll take your money and run with it. Many people trade off doing the wrong thing for increased success, but with integrity and decency, you're not even interested in doing that. You just bring your A game into the market each and every day. The people who see you turning up and doing your best will take note. This applies in your job, in your work, in your relationships, in everything. Going fast typically means that you've not built a solid foundation. That foundation could be removed at any time. That's why we focus as a community on the concept of positive excellence. It's all about doing the right thing. Not because doing the right thing is the ultimate noble thing. It's not about that at all. It's the consequence of doing the wrong thing that keeps you doing the right thing. If you're liking the content so far, and we're a very different community, we're a small community, but a very strong one. And we have the best people here. If you're new, please smash that like button and don't forget to subscribe. You'll find information here you won't find anywhere else, and it's all 5-star quality. For the next FOMC meeting, there is a 0% probability of a rate hike and a 1.7% probability of an easing of 25 basis points. But the most likely scenario is that the Fed holds the federal funds rate constant. That means that even though rates are being held higher for longer, they're not adding fuel to the fire and destabilizing the markets, especially the banking system, which is exactly why the Fed was created. Markets are likely to move around on key macroeconomic data releases, and if you go to CTKS News and Market Analysis, this particular tab, you'll find this here. And we've got some high impact releases coming up within the next couple of days. Just be aware of this because the markets can move around substantially during those periods. We typically see a bit of a rally into the FOMC meeting and the interest rate decision. The key inside financial markets is to be prepared. When you know CTKS structure, you know what the institutions are looking at. They're not like retail. Retail is emotionally driven. The institutions are data driven. They do deep analysis. Doing your three-dimensional risk management is really important. This CTKS code is all about you understanding what did the market do in the past 24 hours? What do you think it will do in the next 24 hours? What percentage of your portfolio do you think will go down, will remain unchanged, or will go up? And how synchronized with the market do you feel? Professionals always plan for the down case, the neutral case, and the up case. They also weight it by a percentage. When we say, let's run the numbers, that's what we're doing. The market will pay you for your synchronization. If you're out of synchronization, you will pay the market. If you pay the market, there's a lesson out of that loss that you need to learn, or you'll keep on paying the market for that particular error. For example, a lot of people, just when they see price go up, they FOMO into that, only to see price come back down. Remember what happened with gold? It was going up to those structural levels and then started to decay. What about oil? We're seeing it come down to structural support levels starting to round. A lot of people will be selling, not buying, and in probably the exact point where oil starts to rebound. The S&P, the SPX, is a really good one. The SPX came down, but it had so much structural support underneath its price. It was probabilistically likely, because of the CTKS method marking up all of price history, to find that structural support and then rebound. And that's exactly what it did. We see this each and every day. You can have retail levels or CTKS structural levels. The choice is always yours. When you do, your opportunity scans, and you can see there's so many opportunities inside the market. You just need to know the structure. Look at your Tier 1, Tier 2, and Tier 3 charts. They'll give you so many setups. And then you can apply that to anything that you're trading or investing in. Keeping positive inside financial markets is really important because mainstream media will try to make you incredibly negative. The key in everything in life is to go slow to go fast. Stop being in such a hurry. Life passes. Life is a marathon. It is not a sprint. But you can say, oh, Ken, I've got all these bills. I need to get out of debt. I have to move quickly. If you move quickly, you'll go backwards. If you don't have knowledge, don't have skill, don't have understanding or experience, and get your experience by starting small and scale. Don't go all in and more without knowledge and experience because you'll just lose your money. Always remember that the markets and life give you pullbacks. They're just lessons to be learned. Always approach any pullback with a steeled attitude. A steel attitude. That means that you're literally made of steel. You say, I've got this. You say, this won't beat me. You say, no matter what life throws at me, I will be triumphant. And you mean it. If you suffer a loss inside financial markets, that's simply the market saying, hey, don't do that. It's like putting your hand on the stove. Unless you're Homer Simpson, you're going to keep on doing it. But if you're intelligent, you say, hang on, the market just taught me a lesson. I had a loss. And you can get mind-numbing losses. We've all been there. That is, all the people who are professional, that is a rite of passage. It's supposed to shock you awake to say, oh, I need to learn. You cannot have opportunities without courage. You cannot have courage without knowledge and experience. Always be dedicated and committed. At the very time you want to run away from the markets will turn around. And that's exactly what's happened recently. It happened in the last 24 hours as people were fleeing the markets because, oh no, the Great Depression is coming. The markets turned around, and when it's positive for a couple of days, they'll start to come back and the markets will slap them again because they are desynchronized. Therefore, we must either win or learn, and learning creates earning. Never blame, because blame stops the learning process. It externalizes the problem. Always solve your problems with positive excellence. That creates better habits. You are 1 or 2 better habits away from an incredible life. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. And just as a special thing, what opportunities are you tracking right now? Okay, have a great one ahead.